Good evening, ladies and gentlemen. This is Barry Norman on behalf of CMS Trader and Investing.com, and welcome to our webinar on support and resistance. Now, tonight's class is sponsored by CMS Trader, one of the world's leading platform providers for CFD, Forex, cryptocurrency, and spread betting. And because CMS Trader is a regulated provider, I'm required to give you a risk warning. So let's read that and get it out of the way. Trading Forex, CFDs, and spread bets on margin carries a high level of risk and may not be suitable for all investors. You may lose more than your initial deposit and could be required to deposit additional funds. Please ensure you fully understand the risk and take care to manage your exposure. Now, if you like, while we're in class tonight, if you go to www.cmstrader.com and just click on the buy or the sell button on the platform, you can open a demo account by simply inserting an email address and picking a password, and you can use their charts and follow along with us in class this evening. If you can't access their site, it's because CMS is not regulated in your country and only provides services where they are regulated and authorized. Now, CMS Trader provides a huge education section. They have all types of analysis tools, videos, information packages, documents, letters, classes, seminars, everything you could possibly want to help you learn along the way. And because they're a regulated platform provider, there's no dealer intervention on trades. There's no conflict of interest between the broker and the trader. You have 24-hour customer support, and they offer all types of services and tools to help you along the way. You can have many different trading accounts. You get free daily signals. You get unlimited access to all their platforms. You also get market updates and technical analysis. Everything you could possibly need or want from a broker is available on the CMS Trader platform. You get a wide range of instruments to trade from. You also can use their watch, copy, and profit, their social trading, to duplicate trades of some of their most successful traders on the platform. And you can also enroll and become part of their independent traders class, where you get video tutorials, you get one-on-one sessions, you get ebooks, everything you know to help you reach that goal of being an independent, smart trader. Now, tonight's class is being recorded. If you want to access a recorded version of tonight's class in about 24 hours, you can go to www.investing.com, where you enrolled in the webinar, and locate the education tab, and then locate webinars on demand, and you can see not only tonight's class, you'll see all the classes we give all year, and you can watch them at your convenience. So let's move forward with support and demand. Now, defining the concept of support and resistance is fairly simple. When discussing it in the context of the stock market or the Forex market or the CFD market, it defines the level at which buyers and sellers step into the market and where the law of supply and demand comes into play. Imbalances in supply and demand create support and resistance levels. For example, when an overwhelmingly high number of buyers step into the market, an indication of support is being put into the market. Conversely, a large number of sellers indicates that there's overhead resistance. And what support and resistance are areas in the past where price has had a problem either moving up or down. And it's available you see it on price charts. And these areas can be defined in many ways, and you can have all different types of support and resistance on your charts. Now, when you can isolate particular price levels that are critically important to buyers and sellers, you can then prepare for some type of an action at that level. So the price levels which create support and resistance only tell half the story, because we mentioned the key phrase overwhelmingly high. So if you look at an area on a chart where you have either resistance or support, say hypothetically, every time the euro moves up from $1.18 to $1.19 and starts looking like it's going to rally and move up, it gets to $1.20 and it peters out and falls back down. If this happens over time, many times, that $1.20 is a resistance level because the price has difficult time pushing through it. So as that price starts approaching that level, what will happen is you will have buyers leaving the market because they will be closing their contracts because they don't believe that that price will be able to break the 120 level. So they moved in at 118 and they say, well, every time it gets to 120, it bounces off and falls back down. So I'm going to close my position as it gets there. Doesn't mean it can't break through, but statistically and using probabilities, most likely it won't. So they want to take their money out of the market. Now, if this is combined with what we call overwhelmingly high volume, okay, we can then predict. So as the price reaches that 120, okay, if we see a large amount of buyers jumping into the market, then we can see that most likely it's going to push through that resistance level and continue up. If we see buyers exiting or the volume declining, most likely it's going to bounce off of that resistance level. Now, support and resistance words are interchangeable. Okay. So indicators also are a great addition when looking at support and resistance levels. This is because the indicator will act as another form of validation. Now, I know most of us do not know the basic economic facts or the economic explanation of supply and demand. And to be honest with you, it's very difficult and very complex. And to be able to just predict how markets are going to react by supply and demand is very difficult. But one of the ways you could have seen it recently is in all the Bitcoin price rise. Why has Bitcoin rallied to record highs? You know, we see all the headlines in there. It's not because something happened around the world that sent the price skyrocketing. There was no economics data that affected Bitcoin. But as we got more and more press on Bitcoin, as the CBOE, the Chicago Board of Exchange, added Bitcoin futures to its regulated trading, and as the NASDAQ announced they're going to launch Bitcoin in 2018, as Bitcoin and blockchain got more press, what happened? More and more people entered the Bitcoin community. It was just a couple of years ago, there was only a few people trading Bitcoin. No matter what happened with Bitcoin, there was only a handful of people who wanted it. As this community got larger, the demand on Bitcoin increased, not because investors are buying up tons of it. You know, a year ago, you wouldn't have thought about owning a Bitcoin. Well, now everybody's buying one here, one there, one here. You know, I just recently was reading an article about, you know, this grandfather who bought one Bitcoin for each of his grandchildren and gave it to him. Okay, this wouldn't have happened a couple of years ago. So what happened was the demand for Bitcoin is increasing, therefore driving up the price because it's got a limited supply. And this is how supply and demand can affect the markets. Well, you also need to know where these prices, when they're moving up and down, how you can see this supply and demand factor happening. Where should this price rise to? Where will that price have a problem moving above? How could I set my stop losses and my take profit points? How can I know when to enter and exit a market? And one of the most important ways to do this is using what we call support and resistance levels. So to give you an easier example, imagine there's an elevator in front of you. The doors are open, and I paint you all gold, and I write across your chest $1,250. So you're gold trading at $1,250. Now, the elevator door closes, but you don't have any hands because you're just gold. So you can't push any buttons, so you're going to stand there. Now, what is supporting you at $1,250? The floor below your feet is holding you up. So that is your support level at $1,250. If you need to move up or the elevator starting to go up, the ceiling is your resistance level. Now, because you have no control over the buttons, you don't know if that elevator is going to move up or down, and you don't know if it's going to go to the 5th floor, the 10th floor, the 22nd floor before the door opens again. But when price is rising, if you had been able to do some calculations or inspections or interpretations, you might come up with some floors that would be critically important, that as price is rising, most likely the elevator will stop on that floor. For instance, if you know the 5th floor is a floor full of conference rooms, and you knew that there was a big conference scheduled at 12 o'clock today, and it's 11:45, you know most likely that elevator's can go up to that 5th floor. You might know on the 10th floor there's a great big famous restaurant, and we're getting lunchtime, so there's a good chance every time that elevator's moving up, it's going to, somebody's going to be riding it up to the restaurant. You also know on the 15th floor there is a smoking deck. Well, the building is very busy. It's the middle of high time. It's also lunchtime, so most likely you have smokers going up to the roof to smoke. So if you're stuck on that elevator, there's a good chance it's going to stop at 5. If it doesn't stop at 5, there's a good chance it'll ride up to 10. And if it doesn't stop at 10, most likely it's going to go up to 15. So since you don't have any control over where it stops, you're going to have to help. So by knowing these levels, you can approximate and determine where it will stop. You know, when it closes that door on the 10th floor, most likely it's going to go down to the ground level, because it's probably people that are leaving that restaurant and going down to the lobby to leave the building. Because the conference room at the 5th floor has a conference at 12 o'clock. So that conference is just starting. So people are going up the elevator, but not down the elevator from that 5th floor. Okay. Well, this is the same stories that can be applied to the markets. So support is the price level at which demand is thought to be strong enough to prevent the price from declining any farther. Now, when we talk about support and resistance, we're going to talk about them as the elevator moving up. So support is holding up price, resistance is holding down price. But if the elevator was moving down, they would just exactly flip-flop. So support does not always hold, and a break below support signals that the bears have won out over the bulls. A decline below support indicates a new willingness to sell or the lack of incentive to buy. Support levels are usually below the current price, but it is not uncommon for a security to trade at or near its support level. Technical analysis is not an exact science, and it is sometimes difficult to set exact support levels. In addition, price movements can be volatile and dip below support briefly. Sometimes it does not seem logical to consider a support level broken if the price just closes 1/8 below the established support level. Now, here we talked about it being part of technical analysis. I elevate support and resistance beyond technical analysis because I believe that there are 3 crucial building blocks, a crucial foundation. Like an architect has to incorporate in his building. He has to know how to plumb his building and make sure it's square, how it fits in. There are certain basics. A builder needs to set that first cornerstone exactly right, or the rest of the building will be cockeyed. And to me, there are 3 pieces of data that no matter how you want to trade, no matter what you want to trade, no matter what you're trying to evaluate, you need to look at. And that is number 1, trend lines. Number 2 is support and resistance levels. And number 3 is volume. So no matter whether you want to trade from fundamental analysis or you want to trade from advanced technical analysis, you're looking for chart patterns. No matter what tools you're using, these 3 pieces of information are your building blocks to making any trading decisions. Support and resistance. If you were looking at an entry point, what do you think would help give you an entry point? If you already did all your analysis, you decide the euro is going to go up, where would you want to enter the euro? Well, if it was at a support level, which is the price holding it up, and it bounced off of it moving towards the next support level, I would want to enter at that point. If it was approaching a resistance level, say the roof deck where the smoking was, I would want to be exiting the market. So these things help you find important levels. And again, resistance is exactly the opposite. But if you just close your mind at all times and think of this elevator and the feet, if you were in the elevator at the roof and it was going to move down, what is holding you up at that point? You have to break through that floor to get down to the lower level. So what is that? That's your resistance. When moving up, it was your floor, which was your support. Okay. And as price moves through support and resistance, they automatically reverse. Because when you were moving from the ground level up and the elevator was going up, okay, your next support level, your next resistance level was that 5th floor, right, where the conference room was. When it breaks that or goes above that 5th floor, what happens? That 5th floor becomes your support level, and it's going to move up to that 10th floor, which is your next resistance level. Now, another principle of technical analysis stipulates that support can turn into resistance or vice versa, as I was just explaining. Once the price breaks below a support level, the broken support level can turn into resistance. The break of support signals that the forces of supply have overcome the forces of demand. Therefore, if the price returns to the level, there is likely to be an increase in supply and hence resistance. The other turn of the coin is resistance turns into support. Again, imagine the elevator moving up and down. Now, you can also imagine volume as being the activity of the building. Okay. If it's the middle of the night, that restaurant and that conference room have no validity. So what would have validity in the middle of the night? The roof. Okay. So when you have what? Volume, it validates what's going to happen. Or if you have lack of volume, because imagine now it's 12 o'clock, like we talked about, there's a conference going on the 5th floor, the restaurant on the 10th floor, and smoking on the 15th floor. So all the offices in that building are packed full of people because everybody's at work at the prime time of day. Plus they're going out for lunch, they're going, and when are they going? They're going to the roof to smoke their cigarettes. Okay. Most of them are going up to the lunchroom on, the other restaurant and everything else that's on the 10th floor. And you have the conference starting on the 5th floor. So if you were in this elevator and it was on the ground level and the door shut and there was nobody else getting on that elevator, there's a much higher probability that it's going to go up to that 15th floor to get somebody who went up to smoke who's coming back down that lower level, because it's too early in the day to go up, that people will actually be leaving that restaurant. But because there's no body in that elevator, it's hard to predict. Now, if that elevator was full of people and it picked them up on the ground floor, where would they most likely be going when there's a 12 o'clock conference in that conference room? They most likely be going to 5. And what does that create? Volume. So as those people get off on the 5th floor, but if the elevator stopped on the 16th floor and a couple people got on, and not on the 16th, if the elevator stopped on the 6th floor and some people got on, there's a good chance they're either going to the 10th, or most likely you can probably look at them and figure out they're going up to smoke on the 15th. And this is the volume. It's the amount of people moving in and out of that elevator off and on those floors. It's the amount of contracts and buys and sells happening in the marketplace. So we can break it down that it's pretty simple. Now, there are many ways to get these support and resistance levels. The ones we're talking about right now are from what I call eyeballing. Eyeballing is by looking at charts and finding where prices had a difficult time going through. Not just today, last week, last month. We know, like with gold, okay, 1200 is a long time historical level. So if price is moving down, we know that gold might have a problem on 12. The more times this level has been hit historically and reacted to that level, the more valid it is. So to make this easier, let's go pop up some live charts here and let's do this or see this in real life. So hold on, let me pop up. Now, we're looking at the current, as soon as it pops up on your screen. This is just a gold chart. It's not a very complicated chart. All these lines I put on this chart actually for a class yesterday. Okay. Now, these levels, these red levels I drew on here, these are support and demand levels, or they come from where price has historically had actions and reactions. Okay, and you can go back as far as you want. And sometimes when prices like Bitcoin is moving at historically new levels, you can't even find it. When the euro fell all the way down to $1.06 and then moved back up, we might have to go back 2 years ago to see how it reacted and what prices were important. But here we can see that on this gold chart, look at all these open and closes on this price. Look at how we got a swing high right at this price. Look at the closes at the same price level again. Look at how significantly important it was here. Another swing low right there. So we can say that 1247.9 was a critically important price to gold. And you can have as many levels of support and resistance you want. The closer you are to price, the more important they are to you in the short term. But if you were looking at gold at 1270, okay, and the next major resistance level or support level was 1247, okay, we wouldn't necessarily look for a whole bunch of levels in between, but we can look at them and try to find other levels that might be important to traders. So we look at this level right here. We see all swing lows here, swing lows here. We can see a peak right here. So, and then we can go back farther in the historical charts to look for them. That's one way to get them. This is what my favorite way. This is what I call eyeballing. You're looking at charts and looking where price congested in the past. And you can go back and look at charts from 2 months ago, 3 months ago, a year ago, 5 years ago, anytime that gold was trading in this level. So as you can see, we have a resistance level here, a support level here. And like I said, these weren't drawn on today. These were drawn on yesterday. And so prices moved all the way up from where it was trading here and moved here. And look at all of that has housed this price. Okay, we've got very good support level here and resistance level here. And this price has been all day today bouncing between this support and resistance level. We could have gotten in a lot of trades between 1267 and 1271 today. Every time it hit that resistance level, it fell back down to support, and every time it hit support, it fell back to resistance. And we have this level. Okay. We can combine that with trends, because a trend line also works as a support level in an uptrend and a resistance level in a downtrend. So here we have a very valid active trend line. This one dropped on here yesterday beautifully, giving us 1, 2, 3, 4, 5 points in common. So therefore, it validated that trend line. Unfortunately, today, price dipped lower than that, so we would have to change that trend line because we can't have a price break on a trend line. And we would have to redraw that trend line today from this swing low and touching here. So we would, but the trend line still serves as a support level. So if we were to see, and when we see the trend line overlap a support or resistance line, that reinforces that price line. So it's going to tell us when price dips down to this level here, to the 1267 level, most likely it's going to bounce off of that and the trend line and move back up. If it breaks there, right now, we estimate it would fall to 1247, the next major resistance or support level. So this was done fairly easy with just doing what we call eyeballing. And we're going to tonight look at different ways to get support and resistance, because you can get them from different places and use them all. They all have validity. let me just get these off the charts. Now, if we combine this with volume, and when we see price moving in a steady uptrend, we would expect volume to hold at a steady level, because that just tells us, and that's really very unique. When we have price moving up or down, volume price moving up or down radically, that means that buyers or traders are jumping in and out of the market. Here, the buyers enter this market at the beginning of this uptrend and have stayed steadily in this market. Okay. Oh, this is, forget the RSI below, because we're not talking about any technical indicator. We're talking very easy concepts to learn and understand. And when price is moving around a support and resistance level, okay, we would expect it to ease up or fall down depending on how it's reacting to that support and resistance level. But if we combine that with a trend line and price is moving in a steady, regular trend, and this is a beautiful uptrend, each one with a push and ease, push, ease, push, ease, push, ease. It's a standard textbook trend. And gold is, this is actually a live chart on gold. Okay. It's telling us something of relative importance. Okay. Now, we do see a slight peak in volume right here as prices moved up to the upper levels. So if it continues to moving up and the volume starts increasing, we might think it might break above the 1271 level. If volume stays steady, we could expect it not to fall, but to bounce off of this resistance level. Because again, push and ease, push and ease, push and ease. As the buyers jump in at price, then they ease back. The bears take a break, the buyers sell a profit, and then they come back in and push it back up. And this is how you would expect a trend to move. Let me just get my markings off of here. Then we can look at, here's a beautiful chart of Bitcoin. Now, this is a 1 hour trading in Bitcoin. And we can see here the major resistance of 545.12. We can see a major support level here. And we would expect Bitcoin to move back up to bounce off of this major support line. If it doesn't, it will probably come down to 1309 and then move back up to its big resistance line, its major resistance line at 18,039. Now, there's no laws, there's no guarantees. It's just speculative. It's moving it's making sense of price. Price can break through that resistance or fall through support at any time it wants. But that's why if you know where that support level is and it falls through, that's telling you it's most likely to go to the next support level. If you combine that with volume, okay, and volume's going up, but it falls through a support level, that's telling you that the sellers are jumping in the market. If it's hitting a resistance level and its volume is falling, it's telling you it's not going to break through that resistance level. So let's go back to the PowerPoint and let's move a little bit far forward on this. Now, support and resistance are not difficult concepts. They're not hard. They're not a bunch of analysis. Now, you can get support and resistance levels from Fibonacci levels, because that's exactly what the 50, the 68.1, the 23, the 38 all do. There are support and resistance levels. You can also get support and resistance levels from GAN fans. You can combine all these together. You can combine and box Fibonacci levels and eyeballing support and resistance levels, and we're going to talk about pivot point support and resistance levels next, and you can combine them all together. You can do whole trading systems just on support and resistance levels. But when you see, let's get some basic rules. Okay. So number one, we want to watch for breakouts. As we noted, price can and does cross their support and resistance levels on the way to forming new trend lines. Use the current levels as guides, but realize they will change over time. Think of changes as opportunities for more profit. When charting the price action of an asset, expect to see at least 2 price bounces before considering a given high or low to be a resistance or support level. Preferably, you will want to see 3 bounces since each one strengthens the signal. 3, Asset prices tend to test support and resistance levels without breaking through them. You'll likely become nervous when this happens. It's normal. Calm your nerves and learn to trust your charts. When a breakout occurs, it usually does so in the context of forming a new price trend. Your chart should give you a heads up about that in advance. Now, with my elevator explanation, this is the one thing you don't see. I can't explain it to you in an elevator. Because these support and resistance levels are critical, that most likely they can push and barrel right through, but most likely it's going to touch it, bounce off of it, touch it, bounce off of it, touch it, and then break through if it's got momentum. The reason being is, imagine if you would enter the euro at 119 and you knew 120 was a critical level, so you put your take profit at 120, or you would set up an OCO to buy right below the 119 level if it gains momentum. Okay, there's lots, because this level is known to other, it's not a private personal support level, so it's known to other traders. So as price is moving up to that resistance level, a lot of traders have put their take profit levels at that 119.82 or that 120 level. So that triggers lots of sell orders. So the buyer, all those orders in the system are getting sold. Well, that's going to ease the price back down. If it has some momentum, the buyers keep entering the market. The new buyers are going to wait for it to ease back down, and then they're going to thrust to push it back up. And it's probably going to come to that 120 and then clear out more of those buyers. And then that last momentum will push it right through, because we have to clear out all those technical buying and those computer buying and selling orders that have been sitting out there. So the other point is, don't get lazy with your charts. The more you trade a particular asset, the more you feel that you know how it's going to move or how it's going to react to price. Okay. If any of the above concepts seem complex and confusing, don't worry. With time, you'll find out how simple they are to apply and understand. Most of the complexity is due to lack of familiarity. Now, another group that makes up resistance are ones that bought at or near the resistance and are trapped when price fell at resistance. And this is what happens. A lot of times, a lot of people are getting stopped out because they put, if they're selling, their stops are below, and they're buying, their stops are, the stops are below, and if they're selling, the stops are above. And if the prices moved and touched that resistance or support level, most likely it's also triggering a lot of their stops. So because technical analysis is not an exact science, it's useful to create support and resistance zones. Each security has its own characteristics, and analysts should reflect the intricacies of each security. Sometimes exact support and resistance levels are best, and sometimes zones work better. Generally, the tighter the range, the more exact the level. If the trading range spans less than 2 months and the price range is relatively tight, then the more exact support and resistance levels are best suited. Identification of key support and resistance levels is an essential ingredient to successful technical analysis. Even though it is sometimes difficult to establish exact support and resistance levels, being aware of their existence and location can greatly enhance analysis and forecasting abilities. Another great way to find support and resistance levels is to mark levels in the past where prices had a difficult time breaking through. As price moves up and down, each level that price has bounced off of could be a new level in the future that price bounces off again. Now, this is what I call eyeballing. This is what we've been talking about. This is a manually intensive method and takes time to draw on all the currency pairs that we trade, but can pay off in the long run. The nicest thing about doing this manually intensive escapade, like you saw on gold, is because it makes you aware of price and the personality and how that asset's moving. Too many of us want to drop automatic things on the charts and never get the feel for what is really happening. So here's a typical easy way to do it with a short-term support and resistance level. It was very easy to identify this area of support on the charts because look at all of the prices in common on the Japanese yen as price moved through this zone. So we were able to establish a very important level at this price. And as price moved forward, again, it held validity. So when just a short time later, price fell as it moved back up, look at how important that price level was. Also, we combined that with the Fibonacci levels because when we dropped the Fibonacci levels on this uptrend, it gave us a 78.6 level of retracement right here, giving us that as a crucial level. So we've now combined that with two different types of support and resistance. The more times the price bounces off the support and falls back to the resistance, the stronger these support and resistance levels become. It creates sometimes a self-fulfilling fantasy. The more those historical patterns repeat themselves, the more traders know them and the more confident they become in using them in their forecasting. So support and resistance analysis is an important part of trends because it is used to make trading decisions and identify when a trend is reversing. Okay, now we come to another way to get support and resistance. And most traders use what we call pivot points. I use them as a secondary. I preferably want the manual intensive eyeballing. And this is how I do it because I'm a chartist and I want my hands on those charts. But pivot points come from a calculation. And they are put on what we call a pivot point chart. Now, we don't want to look at Fibonacci's, Camarillo, Woody's, and DeMarc's. We want to only look at classic. Now, we can get these all over the internet. They're not secret numbers. These come from investing.com, and you just go to their technical analysis page. They're already calculated for it, and they're updated continuously as price moves. So we can see here in this chart that this was pivot points on gold, and it gave us support 1, 2, and 3. That's the next three levels, or that floor 5, 10, and 15 above gold, and the floors below gold also. And we can put these on a chart, and we refer to these as pivot points, support and resistance levels, but they are still true support and resistance levels. You can also get them from what's called a pivot point calculator. Now, this is done what we're looking at with a pivot point calculator, but a pivot point calculator, you actually put in the numbers yourself of where the asset's trading, what the high, what the low was, and fill it in, and it does the calculations on demand for you right then and there. So you can have one stored anytime you want to use it, or you can go, this is investing.com. You can get them on FX Tree. Any place that offers technical analysis will have the pivot points for you. We can also get these from what's called a GAN fan. GAN fans are more complicated. We have whole classes on GAN fans, but GAN fans are one of the only indicators that predict forward price movement. So GAN fans also give you each one of these fan blades is an area of support and resistance, and each one of these bones or the outside edges are levels of support and resistance and can be combined into overlapping support and resistance areas using several different support and resistance clues. And when you see several of these coming together, because like if you use your eyeballing and then use pivot point charts, most of the time you'll be pretty good and you'll see they're almost overlapping or pretty small ranges in between them. You can put these together and call them zones and say, okay, this is my support zone. It's between this price and this price. Okay. Now, most experienced traders will tell you many stories about how certain price levels tend to prevent traders from pushing the price of an underlying asset in a certain direction. But determining future levels of support can drastically improve the returns of short-term investment strategy because it gives traders an accurate picture of what price levels should prop up the price of a given security in the event of a correction. Conversely, foreseeing a level of resistance can be advantageous because this is the price level that could potentially harm a long position because it signifies an area where investors have a high willingness to sell the security. So let's talk about these. The easiest way is, number one, we call it trend challenge. Support and resistance often act as decisive trend changers. When an existing trend line meets resistance, be prepared for a dramatic shift. So like here, in this stock chart, we saw price break through this resistance. We established a resistance level. Saw price fall right through it, no problem. When it moved back up and hit that resistance level, the short-term uptrend petered out and it moved back to a downtrend. Now, we could have said this is the push, ease, push, ease, push, ease of a longer-term downtrend. But in the short term, it moved back. So we can say it's either a correction or a part of a longer-term overall trend, and it makes that trend bounce. Push, ease, or a wave in a price movement. Now, also remember these reverse. So if, as we saw, prices falling in this downtrend here, touched this level here, bounced off, came back down, had some open and closes level, bounced off of it, moved back up. So we established a short-term support level and drawing it forward, because you can draw these forward. They don't disappear. You know, support and resistance do not vanish. They stay forever. It's what price moves away from, so they're no longer important to you because price moves away. But whatever price comes back to that level, those support and resistance levels are still valid. So what happens here, though, is when price then breaks through that support level, it reverses its ability, or it's what it's called, and becomes our resistance level. So when price moves up, it gets resistance and can't break through and falls back down. So they're interchangeable and they flip-flop depending on where price is relative to that line that you drew. Now also, the more times that price supports that price or that level, the more valid and the more important it is. So we can see here on this chart, the price fell through here, and this is where we established this support level, and it was probably brought through before, but we can see all of those opens and closes, those swing highs and swing lows touching this price. Although it kept breaking through there, fell all the way down through that price, but came back up and was not able to break that price. Yes, remember, this is a bar chart, so these are highs of a price movement, but the closes and the opens were right on that support level. Fell back down, price moved back up and wasn't able to break it, fell back down. So most likely, if I was trading the market, I would set this as my level to enter this market for a short, because already we have 4 bounces of that. Would have been the 4th bounce on that price. And remember, volume reinforces this. If a resistance support level is associated with an increasing volume, the trend becomes more valid. So if we look here, we can see that 42.50 has served as resistance for this stock for many, many years. Okay, and every time it came to 42.50, it bounced off of there. It was never able to break above there for all of that trading period. So each time the price level is tested, volume increases. So you can see that volume increased every time it came up to that 42.50 level, but then fell right back off of it because we couldn't. This pattern adds weight to the 42.50 level, indicates that overcoming that price point will take significant time. And then also remember, time matters, because you can draw support, you can bring forward support and resistance lines for as far back as you want. But the more recent those levels were tested, the more valid they are. But sometimes when an asset's trading in a weird price level, it might not have reached that price level for many years before. So the more recently a level has been established, the more useful it is. The problem with the current bear market, or now for us, the current bull market, is that quick losses have many traders looking well into the past for support levels. Okay. So we have to remember, and you can go back as far as you want. So in conclusion, support and resistance are just key mile markers in a security's progress. Whenever you're developing trading strategy, consider these points on the graph. Doing so will help you set profit targets and prevent frustration when eventual reversals occur. So that's it for our beginnings on support and resistance. We have classes coming up on Fibonacci levels, on trends, and trend patterns. All of these are done using support and resistance. And you can slowly build this in, but there are whole trading systems that are all based on, and also robotic trading, simply based on support and resistance levels, trend lines, and volume. And they make an entire trading system. So you don't have to get off into this right field with all these exotic indicators and oscillators. Okay. This is a great way to start trading, but it's also a great thing. The reason I told you it's part of your foundation, because if you notice, all this will help you point out prices that are important. So whether you're using MACD, whether you're using RSI, whether you're using some complicated robotic trading, it will let you know that maybe you're on the right path or the wrong path. So on that note, guys, I'm going to say goodnight to everybody. Wish you a happy and healthy holiday. No matter what you celebrate, it's just a time of year, and a best of New Year's. Right now, I don't think I have any more classes with you until after the holiday. So thank you very much, and we'll talk to you again real soon. Bye now.